Hello, this is Jamie, and this is Supplier T News. For today's small business news, we're going to be talking about President Biden's potential tax hike on capital gains. So we're talking about what capital gains are and kind of what that could mean for small businesses. But first, if you like the content that we provide, make sure you subscribe to the YouTube channel. I really appreciate it. We're trying to get to 100 subscribers. Would appreciate that support, as well as like the video, leave a comment, and share with other people who you think may be interested in this content. All right, let's go ahead and get started. As you can see here, according to the Foundation for Economic Education, top economists just warned the latest Biden tax hike would have one huge consequence for small businesses. Now, before we get started, I'm going to kind of scroll down here. Let's first talk about, what capital gains, what's going on right now, right, or what this is. So as you can see, President Biden has proposed trillions in new spending alongside massive tax hikes, obviously with the corporate tax rate, which we discussed I believe last week. But for this one, as you can see here, the White House is also considering raising the capital gains tax rate to 39.6% on people earning $1 million or more, right? The capital gains tax is a tax on the growth and value of investments incurred when individuals and corporations sell those investments. So basically, as you can see here, the current top capital gains rate is 20%. So this hike would amount to roughly it's 19.6%, but about 20% or doubling. And in 13 states such as New York and California, which have their own taxes on capital gains, Biden's proposal would result in some residents facing rates of more than 50%. Now, I do think that last point is important, and I can see the criticism for that. Basically, capital gains, we'll go back up to here. It is capital gains tax is a tax on the growth and value of investments incurred when individuals and corporations sell those investments. Basically, what that means is that if a company invests in, let's say stocks, for example, if they look to sell those stocks, there will be a tax on that. One of those taxes would be, or not one of the, well, yeah, one of those taxes would be the federal government imposing that tax. So, you make over $1 million, so you make $2 million. Well, right now, about 20% of that will be taken away from you, or about $400,000. So that is going to effectively double. Instead of $400,000, it's now going to be a little under $800,000. Now, I want to pause here and mention something very key before we get into what the big criticism is, right? And the key here is that the capital gains is on people earning $1 million and over. Okay, so what we're talking about here is going to affect basically the 1%, really even less than the 1%, right? The more exclusive club, because I think 1% is about like 350,000 in terms of you making that money. I believe so. That's about 350,000, but or higher. But so we're talking about a very small percentage of people just in the first place. All right. Now I understand that getting taxed double. I mean, from 400,000 to 800,000, that's a lot of money that you're missing out on in the example that I gave. And obviously, it could be even higher. It could be over $1 million. So you sell $2 million, you're actually making 800,000. That is ridiculous. I will agree with that. I do think that there maybe needs to be some type of cap on that, where it can't be more than, I don't know, whatever that percentage number is. I'm not going to throw a number out there, but it can't be more than a certain percentage that can be taxed based on the federal government. With the state's taxes kind of over superseding that, and then whatever the remainder is being given to the federal government. But the key here, the main piece here is that I believe, is this where it says it, doubling the top capital gains tax may make for a good progressive talking point, but its economic effect would make it hard for small businesses and hardworking Americans, as it would create a significant reduction of financing for small businesses. So this is the argument that they're making. When you're dealing with this type of high-end investments, a lot of that money will be, as you can see here, are the reward for risky investments. Cut the return of these investments and you will get fewer of them, right? New and innovative companies may never see the light of day for lack of capital. While I understand where they're coming from, there's really no, I understand where they're coming from, right? What they're essentially saying is, hey, if a company now realizes, hey, instead of me making $5 million, I may only make, I don't know, $3 million off of this potential investment. I won't invest it at all in this investment, right? That's essentially the argument that they're making. I don't see that. What I could see is that companies are getting less money because the return won't be as high. But I mean, if we're talking about risky investments, then we're talking about potentially tens of millions of dollars. And even with the doubling of it, there's still enough money to be made to make some type of investment, right? Could be lower. It may not be what a company wants, but so I understand that argument. But I still see investments being made. Point number two, and this is kind of the key point. Most small businesses don't get outside funding like that, right? Like most small businesses, the funding either comes from themselves, friends, or family, right? That's the bulk. It's over 50%. So this argument that it's going to have this major effect on maybe companies with these risky investments or this new technology that they're pushing forth, I just like that's just not that's not the case, right? Because if we're dealing with risky investments and there's tons and tons of money to be made, they're still going to make those investments. Again, it might not be as much, but they're still going to make that to make a profit. And then if your argument is, hey, well, this mom and pop shop down the street may not get that investment. Well, that's just completely incorrect because they're not getting those investments at all in the first place, right? I mean, and you can't even make that argument when you're talking about getting it from banks because banks give out loans, right? So which they have to pay back anyway, so that wouldn't, I don't know, maybe the interest rates will there's just the argument here, it's not going to affect small businesses that are, mom and pop shops that are running day to day. It's not going to affect, it may have some effect to these large, companies being valuated at 80 billion or whatever the case may be. Sure. The main piece may be kind of those medium-sized investments where I can see somebody saying yay or nay on those pieces, kind of at the front end of an investment, maybe angel investors. I could see some type of impact with that, which I can understand that argument. That argument I will give, but again, that argument is, we're talking about just such a small number. We're talking about maximum. I don't know about maximum. We're probably talking about like a couple hundred investments a year that potentially could be lost out. And yeah, those guys, the people who are involved in that, that may have a negative effect. But even within those, they're still going to get some type of, if they're in that, you can only make $1 million or $2 million, so I'm not going to invest because of capital gains. There's still, these companies or these ideas can still get some type of funding, right? Instead of venture capital, they may again just seek out loans, which isn't ideal in this type of environment. This situation, because with venture capital, you also get their expertise and things like that on certain topics. So I get that, but you can still keep, like, there's ways around this, and the critical, the criticism that I'm seeing here about, it's going to negatively affect small businesses, and because of risky investments, they're just not going to invest. I just don't see it. I see this being affecting just the top end companies that would probably receive investments regardless. It does make the argument that it's not just for big business or the 1% who would take a hit. The economist's argument, American workers and consumers would suffer as well. Tax increases would reduce entrepreneurship. People considering launching startups would instead take safer wage jobs because the chance to earn a capital gain from a high growth startup would not be worth all the extra stress, risk, and hard work. I just don't. I mean, again, we're talking about if you make over $1 million, which, I mean, ding ding, that's a loophole right there. So get with your tax or your accountant, and I'm pretty sure they can find some loophole to make sure that you're making the most amount of money that you can if you decide to sell. As well as in terms of investing, people are still going to make these risky investments because there's still such high amount. Even if it goes from 5 million to 3 million, 50 million to 40 million, however you want to play with this, there's still enough money to be made. I don't see it. Whenever taxes are increased, the first piece is, and I've made this argument time and time again, the first piece will always be, well, it's going to be bad for consumers because they're going to raise prices. We've already talked about how during the pandemic and that we went through, when we lowered things like taxes, when we suspended things like, paying back, we did not see prices drop, right? If we give people tax breaks and the prices don't drop, as we did with, the Trump tax cuts, how is there just this big assumption? Like, I don't understand, if something costs $10, we give you a tax break, it still costs $10, then we increase it, not even back to the original amount, but just somewhat more, and now you're going to charge $15, like, you're still making less, and you haven't hired as many people. Like, I don't see that. So I'm kind of going on a rant here, but that's just kind of my 2 cents on this. Yes, it will have some type of effect. I do agree with that, but what they're making out to be, I don't see it going that far. With that being said, since we are talking about type of investments, private equity is another form. I wanted to also talk about this. Private equity firms push for greater diversity and inclusion, but challenges remain. So I do want to point out that according to a McKinsey and Company report, an uptick in private equity firms' diversity efforts last year. So there was an increase. However, there is still more to be done. As you can see, in 2020, women accounted for only 20% of senior leadership in private equity firms, and black managers for only 1 to 2%. So if you haven't been keeping track in terms of this diversity push that has been going on in investment industry, specifically private equity, there has been a push. There has been an increase, but the argument is that obviously there's more to be done. So that way, the thought here is that if you get more women, more black women, for example, is a really good example. Black women, in terms of the percentage that they get, is like 0.3% of venture capital. So if you get more black women on the side that determines who gets the money, the argument is that more black women will could potentially achieve investments. So there is a push. It has been some type of increase, but there's still some work to be done. I do think that they're headed in the right direction, right? I do like to see improvement, and there has been improvement. Obviously, there needs to be more, but I will give an industry its due when they have huddled together and said, hey, we're trying to improve, we're trying to find more investment opportunities, because I'm all about opportunity, right? And everyone deserves an opportunity to receive investments. I've heard a couple of business ideas from black women where even I was kind of blown away, and they didn't have any investments. So there are good ideas out there. And they had a very well-versed team that could handle, or at the very least could have the opportunity to handle the idea that they were pushing. And we're not just talking about kind of indirect things like, hey, I want to do marketing, or which no negative components to that, but like marketing or anything like this. I'm talking about like engineering. I'm talking about like real direct, like manufacturing, real direct type of products and ideas that they were trying to push. And obviously with those, you need funding in order to start those type of things up. So with the more diversity, I definitely think this is a positive idea, and hopefully they continue to increase, and hopefully as they continue to move forward, we do find more businesses to invest in that have different types of people, so that way everyone's getting an opportunity to succeed with their business. All right, so I did kind of go on a rant there. If you're still with me, thank you so much. As always, subscribe to the channel. Leave a comment. Let me know, how I'm doing here. Like the video, and lastly, share with other people who you think may be interested in this content. All right, thank you so much, and as always, have a great day.